starting the weekend planning from gold. Obviously, we saw massive volatility after the US market opened. The price gapped down and then like bounced very strongly as well. It was all over the place between 50.60 and then 49.90, so which is almost a $70 range. It was very difficult for us to do anything around these levels due to the volatility, obviously, and then it went continuous up. The plan is still long, so if we see any time frame on gold, we'd understand the price action is still bullish. We are on course to test a kind of a double top or at least towards the higher levels of 5400 if this volatility continues, and especially if the threats that are there from the US side on the Iran front is it does materialize, obviously. Uh, with all that being said, we need levels where we can actually long. So that's 50.30 and 49.90 and 49.20. So these are our levels for entries based on time price opportunity, based on order flow, based on specific levels of volume, high volume nodes, and uh, that kind of aligns with price action trading as well. Uh, we will generally like to take the round figure support trade better. So the 5001 I think is a better trade than 5030 area. Obviously 49 is far better than that if the trend is there, but I don't think this is a level that will get this week. So the focus will be around this 49.90 level. Uh, with some wider SL trade as well after confirmation we can do as well. If we get a confirmation that's a little bit late, we can do wider SL trade that we thought of with potential SLs around 49.60 and targeting around 5200, 5250 in the coming week and next week as well. So that's the approach for gold. Obviously, intraday will be trying to capture $10 to $15 good ones if we can get. That is also some of the narrative basis on the long side that we can do. Now, moving from gold, we obviously have the better ones and clearer ones on the FX side, and Euro USD I think yielded really well for that. I think the yield on the last 1 week to 10 days was really good on Euro part, but I think that has ended, and you will likely go through a phase like this, phase like the sorry, I don't know why it's not printing. A phase like this where things don't go as clean as we would want, and the trend will shift towards the bullish side. And until that happens, I don't think we should do anything. Obviously, there is still far to fall on the downside, and if we get the signal that of that kind, we can target that lower price. But I don't think we have enough evidence on the fundamental side to target something on the short side on something like euro. Uh, uh, I will keep an eye, but it's not a core trade that we are trying to do, like the Euro USD short at this point, because I think we're kind of in a bottom as well. So I'll better wait for the next shift in momentum and target the upside without complicating the job anyway. Now, GBP as well is a very similar structure. We came from a resistance level of 1.3660 area, and the rejection earlier came and took the price towards this bottom, and it's a really good downside trade that has gone on for a week at 10 days and is kind of at a conclusion or a climax in this case, in my opinion, and I think it will form the reversal patterns somewhere around these levels. So we have two supports at 1.3340 and 1.3430. So this is a 90 pip range where we have support areas. Obviously, the 34330 support was tested late on Thursday and early on Friday as well, where the price tried to form a bottom. But if this downside continues and we break that volume barrier, I think we could test the 3340 areas as well and then reverse. But again, like euro, I'm not very keen on shorting GBP USD at the moment due to some conditional factors as well. Now, where with them out of the way, I think USD CAD is pretty great short in my opinion. I think we are at a resistance that has been relevant in December and in January, where December it confirmed the bottom and went up like 250, 300 pips, and then when it broke late in January, it again fell 200 pips as well. So that's a key resistance, and it was again confirmed early in February as well. And that's the same thing that is happening again here at this level at 1.37. Unless we see the breakout above that, I think that's a great shot that we have in our hand. And as soon as this trend shifts into yellow cloud like this, I would like to short USD CAD, and my trade idea would be here 1.3680 area short with 1.3720 SL, and targeting at least 1.36, and then finally targeting 1.35 areas as a final target. So that's a 200 pip target almost, and somewhat kind of a swing opportunity for the week. I think that's something that we can do. Obviously, oil prices are a very big concern for this. If oil prices go up, that is better for us. And if that does not happen, that's not as good. Obviously, USD has also influence in here, but technically, I think from a technical point of view, this is a good setup that we can back if we get the signal. Even if it doesn't go our way, I think it's very much worth the bet. Now, similar thing is happening on USD CHF as well. If we look at uh, if we look at what is happening at USD CHF, it's a pretty similar thing. We are at a resistance level that was relevant in January, and if we go back, it's not a level that has been hit in the recent times. The main resistance that is there is at 0.7880, but I don't think that's somewhere we can go with this kind of price action. And if this resistance does come into play, which came into play in late in January, which came into play early in February, and it's trying to come into play again. So unless we see the breakout happening here, we can target the short on the flip. So something like this is very much doable, in my opinion, in this case. So again, like USD CAD, this is a provisional idea, trade idea. The idea would be 0.7740 to 0.7760 short, with 0.78 as a stop loss level, and targeting 0.7640 to 0.76 areas in the coming weeks. So I think, yeah, this is pretty much similar to the USD CAD idea. And this actually aligns with our views with Euro USD and GBP USD flipping as well, but they are not as close as these two. So I would put some focus on these to start the week. Yeah, that's pretty much about it. Now, with all that being said, we need to also move into the yen pairs, which are obviously some key targets for us. So yen pairs have been pretty much big thing for us, and opportunistic trades have been targeted in this as well. So with all that being said, the main support here for USD JPY is at 153.5 areas, where we have seen the cluster of support that has been there for the last few weeks, and that this breakout happened end of the week. I'd say from only on majorly on Wednesday that the upside came, upside push came. Again, Thursday and Friday stalled mostly. So if we get the confirmation of a trade and the high volume node and point of control area of 153, and we can target some long around there, and we can target some longs around there, and then yeah, so that's something I think is going to be very good. So the trade idea essentially is 153.5 to 153.0 area longs, with stop losses below 152.5 and targeting higher 155.5, 155.6 to 156.7 areas in the coming days and weeks. It's not as complicated as a trade that we would want it to be. It is, I think, better to trade signal to signal and just follow the pattern of the price. Obviously, GBP USD, GBP JPY is still very much highly consolidating, but I think 208 is a very good support that can hold, and that if that holds, that's something that we can I think leverage and try the upside, because there is a free ground, there is blank ground, blank canvas to be broken above 210. If that happens, we have a massive opportunity in our hand. I think that's not something that we should take lightly. Obviously, 200. 7.5 is a very important level. If that is broken, we are going back to kind of a short narrative, which is not good either. So we have to keep our options open, but I think we should focus very much on GBP JPY longs along with USD JPY longs, which are the main opportunities on the EM pairs in the next few days. I think a sister trade on this also can be Euro JPY, although I'm not that much interested in Euro JPY because of the noise being higher. But I think 181.5 is also a really great level. And between 181 and 181.5, I think there is enough support for Euro JPY to follow the same pattern that USD JPY and GBP JPY is expected to do, and at least target this 183.5 to 184.3 areas in the coming weeks. I think it's a pretty good sister trade, although not the main opportunity here. But it will follow whatever USD JPY and GBP JPY does because they are highly correlated. Obviously, that concludes, I think, the yen pairs. I am not particularly interested in CAD JPY, AUD JPY, NZD JPY at the moment. NZD, obviously, we're trying to somewhat avoid because of the noise and all that it brings. Now moving on to something a little more complicated, which is oil. We saw a massive breakout on Wednesday, and then Thursday and Friday kind of stalled around that 66 level. Price was noisy, going up and down randomly without really moving in one direction and making any strides on that. But I think there is still enough on oil prices to make it interesting, but I don't think that's like it's that interesting at 66. It's very interesting. It gets very interesting at 63.2 to 63.5. It gets even more interesting at 62.5. So if it's at 62.5, I'm very much long focused. If it's at 63.25, then I'm quite long focused. But at this point, at this price point of 66.3, I'm not really interested in trading oil at all. Obviously, we cannot short due to the uncertainty factors that the Iran thing brings. But I am pretty much like my eyes are on oil quite a bit because of how interesting that whole situation could be in terms of trading. But I don't think we can short. I don't think we can long at this current level. This is obviously a top level that was reached late January as well. We can see, and the price collapsed there. If we see some similar collapse there, and then the price holds around that 62.5 level and even 63 level, that's something that I would pretty rather long than thinking anything about oil at this current price point. At the current price point, it's pretty uninteresting kind of an asset. Obviously, that changes if we see a breakout above 67. So above 67, let's say with news and with further catalyst on that front, we get a breakout above 67 and we see it persisting to some degree, I'd say, and then consolidating in a way that lets us enter around those levels. I think that can be scalped, but I don't think that's a very good trade. It can be scalped. We can get 35 pips out on oil. It will depend on the particular situation of the day, but it's not something that I'd be really putting on the weekend plan. The weekend plan document and can only include we want to long from 62.5 to 63.25. That's our long area on oil, and it's pretty much backed by the good fundamentals that are coming from the Iran side, that are coming from all this disturbance that is coming on geopolitics, and obviously is further backed by the technical positioning of the price that this bottom has held through February and late January, where prices collapsed quite a bit. Yeah, sorry. In the next part, I just want to touch up on the US indices, which are pretty, I think, straightforward. I think it's not very complicated. The indices are not going anywhere. If we look at Dow, it's been noisy since the start of the year. It has not really moved anywhere. It's stayed in that range between 48.5 to 50,000 areas where it has not really been able to break and settle above. Only a few days it spent above the 50,000 mark, but it quickly came back down and has again solidified that 49.5 average price quite a bit there. I think it's a long short market. Obviously, it's better if we don't short the indices at the moment. It's still, unless the war starts and we break below 48.5 for some reason. I think as long as we hold the range, we can be long focused, and we can keep longing the 48.9 to 48.6 areas, and that would give us something that would get us something solid in the right direction. I think it's not really a complicated thing. When it goes bottom and it conforms above, we can breaks out like this, we can long, and that's pretty much can be our approach on something like this, and similar plan on Nasdaq. I think we might be seeing something that is quite ridiculous and quite unlike Nasdaq to be like since September it has really gone nowhere. Dow is only from December it has gone nowhere, but the Nasdaq is I think shut down from the last 2 quarters, which is not good. From the start of September, it has been in this range of 24.5 to 26 areas, and this is not really very good for the stocks or the tech stocks or something that is very interesting. And 24,600 is quite an interesting and quite a clear kind of long level that is there for us to take, that is there for us to plan and easily long as well. So as long as we are holding these levels, I think we have to play that opportunity stick around 24,500, 24,400, and target the upside whatever we can get. Obviously, we went from 24,600 to 25,000 in a matter of minutes there on Friday. And again, if we see the same thing happening on Wednesday and then same thing happening previous week, it happens time and time again, as many times as it comes to this level. And this is a relevant level from early in 2025 as well. So I think this is something that we have to play if we want to be trading the indices, because the situation in indices is like that. And if we get the opportunity, I think we should take it. Obviously, there are resistance levels as well around 25,300, which is pretty good as well. I think that's something, if we can get good resistance there and find a good opportunity that is risk adjusted intraday as well. Obviously, nothing long term should be done on the indices, in my opinion. And if we get something there, I think we should take that as well on the short side. It's no reason to not short the Nasdaq. I'd not really short the US 30, which is the Dow Jones, but we can, I think, short a Nasdaq at times on intraday, particular days. Similar situation in German index as well. If we zoom out and check what is happening on the German index as well, it's not really gone anywhere since the turn of the year, and the breakout that was early 15 days of the year has been formed into a range, and that's something that has continued. So unless we see a breakout, obviously, unless we see a breakout that is happening and sustaining above the all-time highs of this indices, and we target new highs, which is unlikely in this scenario, is unlikely in my opinion. I think we should keep longing when you get the opportunity to target this to get this lower prices below 24,500, which is a very good level in my opinion in DAX, and we have confirmed that multiple times through the year. And even before, if we go back in 2025, that was the top price that was hit many times. You can see in June, here we see all through July, August, keep testing but failing to break. We're seeing that through October, November, December as well, failing to break. And only in January, after the market got some positivity, New Year positivity, it was able to break. But I don't think it's going to continue. It's going to be ranging, as the Nasdaq and Dow is influencing the global indices as well. And if we get the opportunity to get 24,500 longs, we should take that and target whatever upside that we can get. In this case, initial target will be 24,900 to 25,000, which is pretty great as well, with the limited risk below 24,200, in my opinion. So that concludes everything that we want to do on from gold to the major effects, to yen pairs, to oil, to the indices. I just go back and touch upon the silver prices. But I think, yeah, silver is a very tricky thing to trade. But if we get the opportunity, now that the breakout has happened, if we get the opportunity to take 80 area long or 81.2 area long, that is something that I'll be trading. And although there will be alerts for me as well there to take that. Obviously, I'm not going to price chase silver. If we get the opportunity, we get the opportunity. If we don't, we don't. But if we do get these good entries, and especially confirming something that is confirming either of 15 or 30 minute 200 MAs, that would be pretty interesting in my opinion. So 200 MAs is a very good thing to confirm in something like silver. And if we get that, I'll let you know, and we will target something on that. But I think at the moment, yeah, these are the plans that we have, and these are the very structured approach that we can take in the course of the week that is coming. Thank you.